week, of course, the big one. Jeremy, how you feeling about the reporting season so far?
Yeah, a bit mixed, Ken, but I thought today was quite interesting. There are a couple of good mid-cap stocks that reported particularly well, Slater and Gordon and G8,
Yep.
and both, interestingly enough, announcing acquisitions this week. So these are a couple of very good aggregator style of businesses, a good model to find. If you can find a company doing something well that can just seriously do that on a either geographic or industry-wide scale, you've got an opportunity for growth. Now, they've been two very good performers. Not every stock's been as good through this reporting season so far, but tomorrow's a big day. Car sales, CommBank, we've got some really interesting companies coming up before the week's out. But overall, you know, it's pretty good and it justifies the rise in the market.
How are you feeling about Sydney at the moment, Jeremy? Pretty expensive, do you think?
Yeah,
or,
it's had a very good run. It's one we hold, we like. Probably more of a hold at the moment than an outright buy.
Yep.
It's still going to reward you pretty well with a good dividend. I look at it as probably been the most exciting property trust on the market.
Right.
Very few have got the capacity to have such monopolistic rent, car parking and land value of such incredible amount.
Yeah, greatest shareholder, not so good as a user of the product.
That's right. You've got to be a user.
As the car parking.
It's nice to be able to use it, but it's better to be a shareholder because and these are unregulated assets. These are unregulated monopolies. They can increase their charges, and they don't have these regulators like the gas and electricity distributors have, telling them you can't put your prices up anymore. So really good. And so, you know, I'm just saying that there'll be probably an opportunity lower where you'd want to buy it, Brian, but it's a very good stock and one that fits well in most long-term portfolios.
Fantastic, thanks, Jeremy.
Yeah, we do, and we own. Henderson Group, fully agree with what John did say, that, you know, Australian investors have too much in very few assets, and particularly Australian shares, and certainly very little in international equities. Henderson Group can solve that problem partly for them, and we believe that more Australian investors will have funds going into Henderson Group funds, as well as Platinum, and as well as
the underlying the funds that these guys actually run.
That's it, yeah. Now, interestingly enough, Henderson reported this week, and they went down quite a fairly long way.
Yeah, it was a little bit disappointing, wasn't it?
Disappointing result. It wasn't exactly as much as everybody expected. And this can come about through just the market's expectations rising too much. At the moment, Henderson's on a PE of about 16.5, which is probably around fair, not cheap value, and a yield's about 3.6%. So that's good again, but not special numbers. They do need to keep growing. The one thing about funds management businesses, you've got to keep growing funds under management and you've got to keep performing. It's not an asset like hard assets that you've got forever. You can lose that funds under management if you don't perform. And again, that's why some investors will be reluctant to pay too big a multiple for any funds management group. But we like them and think there's an upside story there.
Always been good managers,
Always got enough skin in the game, and particularly Kerr Nielsen, but ethical, manage it well. They run a lean operation, you know, and the thing is, they probably haven't had as great a funds management growth as either Henderson or Magellan, but you know, they've got a robust name and they...
very solid.
Very solid and very well liked amongst the people who've been long-term investors, and they've been around a long time and looked after their investors very well. That's important.
Fantastic.
Oh, hi. Thanks for taking my call.
Pleasure.
I've been looking at Ainsworth and Aristocrat and just wondered which would the panel prefer.
Okay, good question. So both stocks in the gaming sector, both produce those lovely slot machines, and both of them actually export them. And both of them had the same founder. Len Ainsworth. So interesting story, that whole one, but we don't have time to go into this.
No, it isn't.
So Jeremy...
both look interesting in numbers too, Ken. I think Aristocrat looks good. Ainsworth better to us. Its share price has declined a little bit lately. Its report is next week, and I think it should be a good report. The explosive growth of recent years probably is tailing off. It's got a very high return on equity. It's around 40%. And, you're looking for companies that do that. And when you've got a PE of about 15, they're numbers that add up to us and make a fair bit of sense. So AGI is our preferred out of the two. Another one that we do like in that space, not a slot operator or manufacturer so much, much is Sky City Entertainment, which again they're a bit lower and they report tomorrow, so they look pretty good as well.
Great, yeah. Okay, so Sky City, really interesting phase of the development, isn't it, with the Adelaide project?
Yeah, that's right. That should be a good kicker to earnings, I believe.
Is this a stock that you've got as a buy or a hold or a sell at the moment?
Yeah. We're holding it.
You're holding it?
Yeah. Interesting. I've had it as a sell on the segments we do, Ken. Not so much for a little while, but I'm not a buyer by any stretch. I've got an $8 target price on it, and I'd be interested in looking at that price.
Yeah, I agree around that price.
I think it's a really good question, though, because you've made the comment, carbonated drinks, out of favour, not just in Australia, this is globally. It's a controlled company. The Coca-Cola company controls it. They decide the products that get sold. New CEO, definitely. They're going to take things out. Now's the time to do it. You just take the garbage out.
Yep, kitchen sink it.
Kitchen sink it. And then the other factor, you know, really with something like Coke is the beer. Now, they were in beer, successfully got out, have gone back in. And, of course, that's what you go back to a strategy that worked for you. I just don't think it's going to be as easy for them to make a ding. I think this is a little bit like the beer for Coke, Coca-Cola and Amatil, is very much like Woolworths with the Masters thing. Good in the long run, but don't expect anything in the short term. Yeah. And again, the market will get disappointed a few times, and that, I believe, in answer to Michael's question, is the opportunity to buy. It's not thoroughly disappointed yet, but I believe $8 will give us the price opportunity that is coming. Good.